Welcome to the deep dive. You're with us because, well, you're keen to spot those moments in dynamic markets where real growth potential, emerges. Today, we're navigating the ebbs and flows of the mining and resource sector. We're looking to pinpoint five companies that recent analysis suggests could see significant upside in 2025. It's really about identifying opportunity within volatility.
Exactly. And we've gone beyond just tracking commodity price movements, haven't we? Our focus has been on companies demonstrating strategic advantages. That might be through crucial partnerships or adopting cutting-edge tech, or maybe just smart maneuvering within the whole global resource landscape, things that could translate to substantial growth.
Right. So it's not just about what resources that pulling out of the ground. It's the strategic how and with whom that really catches the eye, I think. We've got a countdown, five companies that look positioned to be pretty significant players in the resource sector next year, companies that seem ready to capitalize on these market shifts.
And just to be clear, this isn't some surface-level glance. The analysis we're drawing from, it considers a whole range of factors. It's beyond basic supply and demand. We're looking at things like government backing, which can be a major catalyst, right? Environmental strategies, which are increasingly vital, and also their strategic placement within these rapidly evolving industries.
Okay, let's dig into it then. Our countdown, starting with number five, Ioneer Ltd. They trade on the Australian Securities Exchange, ticker is INR. Their flagship project, that's the Rhyolite Ridge lithium and boron deposit over in Nevada.
Yeah, and what's particularly interesting here, I think, is their recently secured supply agreement with Ford. I mean, in a market that's just clamoring for battery metals, this agreement, well, it doesn't just provide a guaranteed revenue stream. It also positions Ioneer as, a crucial part of Ford's long-term EV battery supply chain strategy. That kind of partnership can offer a degree of insulation from short-term market price swings.
That's a really strong validation right there, isn't it? And adding to that is the significant loan over $700 million they've secured from the U.S. Department of Energy. I mean, that level of government backing, it really underscores the strategic importance of their output for the U.S. It suggests a political will to secure domestic lithium supply, which could potentially translate to faster permitting down the line.
Precisely. And we shouldn't overlook the fact that Rhyolite Ridge is actually a dual output project. It produces both lithium, essential for EV batteries, and boron. And boron is increasingly critical. It's used in various high-tech applications, things like high-strength magnets for electric motors, and also in agriculture for improving crop yields. So Ioneer becomes a player in multiple high-growth industries.
Okay, so you've got a company basically poised to be a key domestic supplier of two strategically vital materials. And that's happening exactly when secure, localized supply chains are becoming such a major priority, especially in this volatile global landscape.
Right. Okay. Moving to our number 4 pick. This is Ivanhoe Mines, listed on the Toronto Stock Exchange, ticker IVN. Their potential for substantial growth in 2025 is largely tied to the anticipated increase in global copper demand.
And their main asset, the Kamoa-Kakula project in the Democratic Republic of Congo.
That's truly remarkable, isn't it? It consistently ranks as one of the highest-grade copper mining operations anywhere, really top tier.
No, it's crucial, of course, to acknowledge the perceived political risks. Operating in the DRC, that's a factor that understandably influences investor sentiment for some people.
Sure, but as is often the case, right, in markets with higher perceived risk, the potential for, well, outsized returns also exists. And Ivanhoe Mines, they have a significant strategic partner, too, Zijin Mining, a major Chinese mining company.
And this partnership really situates Ivanhoe Mines within that broader context of global resource competition. It highlights how these geopolitical factors are just inherently linked to the future of these mining operations and, the international flow of critical minerals. Okay, number 3. Our number 3 selection is Sigma Lithium. They trade on the NASDAQ, ticker SGML. The analysis suggests 2025 could be a really significant turning point for them, potentially marking their evolution from, a junior player to a more established force in battery-grade lithium.
Yeah, what makes Sigma Lithium compelling, I think, is their operational base in Brazil and also their vertically integrated business model. This basically means they control the whole process from extracting the raw ore right through to producing the battery-grade lithium. That gives them greater control over quality and potentially reduces reliance on external suppliers and those associated costs.
And they've also made a strong commitment, haven't they, to environmental sustainability. That zero tailings approach. Traditional mining often leaves behind these huge volumes of waste material, tailings. Sigma Lithium's approach aims to minimize or even eliminate this. That reduces their environmental footprint, could lower long-term cleanup costs, which is a really significant factor now as environmental, social, and governance ESG considerations become more and more important to investors.
Absolutely. And look, the reported interest from major financial institutions, we're talking Goldman Sachs, BlackRock, along with a key player in the EV industry, Tesla, being interested in their supply chain. That
Yeah.
really underscores their growing significance within the electric vehicle space
Hmm?
and the broader decarbonization sectors. It's getting noticed.
Okay, now for number two, and this one might surprise some people. BHP Group. Trading on the New York Stock Exchange, ticker BHP. I mean, this is a huge, well-established mining company. Maybe not the first name that jumps to mind when you think explosive growth potential.
True, but what's fascinating, actually, is BHP's strategic pivot. They're moving towards commodities crucial for the future economy, particularly potash and, importantly, copper. This signals a very clear understanding of shifting market demands.
And it's not just about their commodity focus either, is it? It's also their operational approach. BHP is actively implementing artificial intelligence, AI, across their operations to drive down costs and boost efficiency. That kind of tech adoption in a company of their scale, that's noteworthy. It can significantly impact their bottom line, especially in a volatile market.
Yeah, and beyond just operational improvements, BHP is also showing a real commitment to adapting to the climate era. They're actively divesting from fossil fuel assets, they're expanding their capacity in battery metals, and even exploring initiatives in green steel production. They're looking forward.
So, okay, while they are a massive established player, they are actively adapting to future market realities. Their sheer size, combined with this increasing focus on ESG factors, makes them pretty attractive, you'd think, for large institutional players, those seeking both stability and growth potential in this evolving resource landscape.
All right, and finally, our number one pick, a mining company with significant growth potential in 2025 is Stardust Power Inc. Now, this was particularly interesting because they are currently a private company. They've got an anticipated initial public offering, an IPO expected sometime in the fourth quarter of 2025. So this presents a potential opportunity to get in, relatively early.
And what's really generating the buzz around Stardust Power is their recent announcement, right, about their Oklahoma lithium processing facility. They've apparently developed a closed-loop system that completely eliminates the need for a wastewater permit. Is that right?
That's it. And this is a huge development, both environmentally and from a regulatory standpoint. Eliminating the need for that wastewater permit, it substantially reduces regulatory hurdles, you could say. It really streamlines the process, and it accelerates their project timelines significantly. I mean, in the mining industry, permitting can often be a major bottleneck. So overcoming this is a considerable advantage, especially in such a fast-moving market.
Right. And that environmentally conscious approach, it could create what people call a market moat, like a significant, sustainable competitive advantage that's hard for rivals to copy. Especially in this increasingly ESG-focused investment world, a company showing clean, efficient operations really holds an edge.
hmm And further enhancing their appeal is their focus on establishing a U.S.-based supply chain for lithium. This aligns perfectly with that growing desire for domestic sourcing of critical materials, adds a layer of security, potentially attracts investors looking to back domestic industries.
Yeah, I've heard the comparison may be a bit ambitious, but it's out there positioning Stardust Power as potentially the Tesla of lithium processing in the U.S., emphasizing that clean, rapid domestic production.
It shows the level of ambition, definitely.
Hmm.
So for those of you tracking potential high-growth opportunities in the resource sector,
Hmm.
particularly in these critical mineral spaces vital for future tech, Stardust Power's anticipated IPO in late 2025 is definitely something you'll want to monitor closely. Keep an eye on that one.
So there you have it, our deep dive into 5 mining companies that analysis suggests have, well, significant growth potential in 2025, especially within these dynamic market conditions. We've looked at companies leveraging strategic partnerships like Ioneer with Ford and those navigating complex global landscapes like Ivanhoe Mines in the DRC with Chinese backing.
Exactly. And we've also highlighted the increasing importance of technological innovation. BHP's use of AI is a great example, and the growing significance of environmental sustainability. Think Sigma Lithium's zero tailings or Stardust Power's innovative closed-loop system. Look, in these volatile markets, the future of resource competition, it really hinges not just on who have the reserves, but on who can operate most strategically, most efficiently, and crucially, most sustainably.
These insights, we hope, provide a really valuable starting point as you consider potential opportunities within the mining sector. As always, though, we absolutely encourage you to conduct your own thorough research and due diligence. This isn't investment advice, just analysis.
Definitely. And maybe one final thought to leave you with. In this rapidly evolving global landscape, how will the escalating demand for these critical minerals driven by tech advancements, the energy transition, how that ultimately reshape not just industries, but the very dynamic geopolitical power on a global scale? Something to think about.